Hi, everyone. How's everyone doing? Strong dollar, weak gold, kind of the things I talked about. Alexander, how are you? Brian Twomey, there's a name I haven't heard for a while. How are you, Brian? Richard Adams, Hugo. Oh, thank you so much, Hugo. Shalom, Sinatra. Jays, how you doing? Let's take a look around. A couple of things I'd like to share with you guys. Okay, so start off with the euro. So I've been patient, waiting for euro to set up what might be a right shoulder here. Everyone see that? Left shoulder, head, right shoulder developing, 1750 pivot. I think it'll probably, go a little deeper than that. This is not the kind of day I buy the euro. The kind of day I buy the euro is when the pound is down 40 and the euro's only down 4 instead of the way it is today. Okay. So EG under pressure. Looks like that bottom may not hold, and we're headed for two new lows. And then it's interesting, if we get this right shoulder in euro, very possible that we're going to get a right shoulder in gold, and for it to have symmetry, it's going to come in right around the 1748 level. So patience to wait to buy this thing. Patience always pays off, but it does here. Actually took a short in it yesterday and covered half. S&P is pretty important what happened here yesterday. Look, when you get a top, the most important thing is that you get a nice failing rally. S&Ps couldn't even retrace 50% yet. If it fails from here, this is a pretty weak rally. And NASDAQ actually did get to the 50% level last night, back under 15.3 right here, which is yesterday's low, and this moving average. You're talking about 14.9 in the NASDAQ. And even though the yen is up a couple, if you saw Blake's chart of the day, I'm definitely in agreement for 108.50. I think it might even be deeper. So yen looking vulnerable, little inside day here. You're wrong, back over 110. But here's the 200-day, and we may actually go for stops here. Anyway, I think we're headed at least to the 200-day, and I don't know what to do with Canada here. I could make a case for a third drive up here, or I could see 123 coming. So it's I don't know, right in the middle. But I'd say the most important thing here is, are the S&Ps, was this a failing rally in the S&Ps? And if we take out this level here, I think there's a chance of attacking what everyone is going to finally say is a problem, and that would be back under this 43.5 low. Okay, so those are my looks. I want to wish everyone, I don't know if you say happy Yom Kippur, but it's the Day of Atonement. So even
Dale,
if you're,
I know I'm so sorry, but you had wanted to take today off, and I didn't think about it until now that you're mentioning it.
it's
And
okay, bro.
I'm sorry. You should have.
No, don't. It's okay. It's okay. I want to work. It's my best distraction to my life.
It is. It's funny. It's funny you say that. I
Yeah,
get it.
over the weekend, by Sunday night, I'm jonesing to work.
Well, it's
So
like you want to trade, you want to be able to talk to people, you want to get ideas, and then I'd way rather do that than watch Sesame Street all morning. I mean,
yeah, that's what I was going to do. Happy fast. Yeah, I broke the fast already. Well, I'm drinking coffee with candles. Anyway, the most important part of the day for me was, it's a day you ask for forgiveness, but you also memorialize those that have left, like your mother and father, if that's the case.
What's interesting is my kids, this is the first year, as they're both in high school, this is the first year, because we have such a big Jewish community where I live. It really is. Well, to this extent, my kids have today off.
So, oh wow, the school closed for it.
Okay. They're like, we're not, we don't celebrate, but hey, that's cool.
All right. Anyway, I'm glad to be here, and your spirituality is in your heart, not necessarily in the the traditions and all the rules and regulations. It's it's how you treat people. And I know that, like, Steve isn't religious, and a lot of guys here, but you guys, whether you admit it or not, treat people with respect, and you're for people, and you don't rip people off. So, and you care if things aren't going well for others, and that's, I think, the right religion is, how you treat your neighbor and other people. And Steve doesn't know it, but he's, a very, religious guy in that.
He's an idiot.
Yeah, well, you may call it by another name, Stel, you too, but it's the same music with different titles. Okay, it's how you treat people, and that's why I love this company, because of how everyone treats people. And you even put up with problem childs in your chat rooms and stuff. So anyway, this this place, ForexAnalytix, I think is an oasis in the desert of FX for people. What do you think? You in? Are you here, Ryan?
Yeah, I'm here. You
hear me all right? And you added to that. I see how you care about the members that you brought over, and how you coach people, perfectly fit in with, that's why I believe the guys made that decision to merge with you. You have that character.
Thank you very much.
Now be a character and tell me why Euro's so much weaker than cable today.
Yeah, it's been hit on all sides, it seems, this morning. It's not too many fundamental news reasons behind it. I think maybe perhaps we're getting a little bit edgy about the upcoming elections in Germany, the leadership stuff and all that sort of thing. Same could be said about dollar CAD. Maybe it's treading water a bit because they've got their elections on Monday. And the market's perhaps only got half an eye on that. Justin Trudeau might have picked a bit of a banana skin in calling this election, because he's not doing too well in the polls. And but it seems to be generally euro weakness. I heard you mention euro sterling, pair I'm short, and I'm looking once again for another break of this 85, 84.80 area. That's my magic number. If we can get below there and hold below there, then the downside's on. And I know Stelios is up for 83s. I'll be more than happy with that. But it needs, it's like it needs these levels to break. If we can't break these levels again, we're back in a range, and then maybe we get a look up 86s, even 87s. But it's
and the weakness in metals. I know Blake's been skeptical and of the metals, actually bearish, and I keep looking at the DSI. That no one likes it, and God, I wonder where the DSI is going to go if we hit, say, 1740 or so, Blake. And the silver maybe even looks like it wants a new low. So the DSI, I predict you don't make money doing it, but I predict the DSI goes to single digits for the metals here in the next several days. And I think I'll be looking for a reason to buy them.
We've talked about metals so many days now, and people have been listening. They know that personally I'm very bullish in the medium term, but we've been saying for days and weeks now they look very heavy. So this is not the place to get long. I'm personally waiting for close to 22.5 for silver, but I think we're going to see 1680. We're probably going to test those lows in gold. and
That
those
deep,
levels, yeah, and those levels, especially 22s in silver, I think is going to be a very nice gift. And speaking of that, we were talking about this on the chat room. You know, Basel III rules, which are taking effect in on January 1st. You know, under these rules, I wrote this on the chat room. You know, banks they're required to hold physical gold or other liquid assets for an amount equal to at least 85% of the value of their unallocated gold. So that means that,
which means they're paper positions.
Yes, so that means that they're going to have to get the physical. Now, Ryan very correctly said they're not going to wait until the last minute to do it. But this, and of course, I'm sure they have been accumulating. But this just feels like it's not a desperate move, but you know, they're trying hard to get the futures lower so they can get their hands on the physical. Obviously, we know that the physical trades at the premium, but it will move in line roughly with spot price. So this just makes no sense, right? You're seeing all commodities, you're seeing everything going higher, and gold and silver apparently are worthless. And you know, I find it very strange. I really want to be very long, but I'm still holding my fire. I have a small position on, which is quite a bit in the red, but I'm very comfortable to hold it, and I want to load up a lot more as we go lower. But at the moment, I'm still holding fire and just waiting for those two levels. I think 1680 in gold and low 22s in silver. That would be magnificent.
Okay, I just have one concern if we get all the way down there, and that's the formation. That looks like a descending triangle. And if it breaks down, you're talking about $1,400 gold. This is a $400 formation right here.
Yeah.
Unless it's just a stop hunt to get all the longs out under this low. This was a kind of a weird low that was after the flash crash. But, you know, the bears would say back under this level, it's a pretty big breakdown. But that's why I'd like to see gold hold above it, all right, above this low, while silver is maybe going to your target. And that's possible. So, and the gold silver ratio kind of, you know, still is correcting to the upside, which makes gold the preferred long over silver. So anyway, that's my 2 cents.
Well, I think those lows in gold, so many people are looking at them. So I think the most likely scenario is what we've seen so many times happen over and over again. We break them, we break below, everybody gets really bearish. You know, the longs get flushed out, everybody piles in short, and then false breakdown, and away we go. I think that's how it's going to work.
Yeah,
you know, the trigger could be the Fed, you know, announcing the taper, giving us information on how they're going to proceed and all that. The market craps its pants, and then we see that move, and then that's it. Then the end.
Did you say crap your pants?
Yeah, sorry, poop their pants.
That's a well-known technical term in finance.
We've westernized Stelios. He says crap his pants. That's awesome.
Yeah. Come on, remember, I'm more British than I am Greek.
You are.
Spent more than half of my adult life in the UK. So there you go.
Good morning, guys. How are you?
Very good.
Hey, I'm sorry. I literally just popped in the last couple minutes when I heard crap your pants. So I'm kind of missed everything that's going on. But did you guys see what happened in Asia overnight? Like, so, you know, the Asian markets are really, you know, coming under a little bit of pressure. I mean, you look at Shanghai's, you know, kind of buckled. And I think it might have something to do with that Evercore, Evergreen, what do you call it still?
Evergrande.
Evergrande. Did you guys talk about that?
Evergrande.
No. You know, well, you know, I'm too, bro.
Yeah, here I'll go ahead and I'll just kind of take over the screen here. Just, you know, I was just looking at Shanghai, how it kind of rolled over last night. You know, Hang Seng's breaking. You know, now you look at like the you know, Hong Kong Hang Seng stock market. You know, it's just like, you know, we hit new lows and we bounce. So I wouldn't get too super excited about that, but you know, Shanghai is really coming under a little bit of pressure, and you know, lower high, double top, you know, however you want to look at it. But you know, I mentioned in this morning's in this tweet that I just sent out that, you know, Ryan and I we were looking at some charts, and yesterday afternoon, and he said, hey, you know, there's a bullish S&P chart. And Ryan, we can have this conversation right now. Ryan's chart was from a different feed, which was the actual index. And I was looking at CFDs. Now, this is a CFD from Oanda, which is similar to the futures, right? And then you go to the trading view. This is the trading view. This mimics the S&P index, and you can see the difference here between the two. Now, I'm gonna zoom in really close here, okay? And this high is slightly higher, which again, this is the index itself, right? This is not a
CFD.
A CFD, right? Or a futures contract, or, a CFD of a futures contract. This is a CFD of the actual index. And you can see that's arguably higher. So that's a bullish, we call it, that would be a bullish piercing line candle is actually what it is, very so slightly. But if you look at, the CFD of the futures, this is an inside day, right? So we were engulfed the previous day by yesterday's move. So yesterday's move actually looked pretty bullish, intraday. But if you go out to the daily charts and you look at the previous day's action, it's not going to be so much. And you took, like, I have the euro up right now, and let me go ahead and refresh that. So the euro was an inside day as well. You take like the Aussie dollar. The Aussie dollar was a hammer, but there was some really questionable charts out there. And then you have the yen and the whole yen complex. And by the way, I'm talking like yen across across the board, had strengthened. Not only the dollar yen, but the euro yen and every other yen pair had really come under pressure, which also made me a little skeptical about trying to chase risk higher overnight. I was looking at the S&P, and it's not that I was long the S&P, but it didn't concern me enough for me to close out my like dollar South African rand longs, which I closed out half yesterday, because when stocks were bouncing back, I was like, well, I'll take some off, and I sold half of it down here, added a third of it back at 1440, and so I'm back in most of my position here. And the reason why I didn't sell it is because I was looking at all the instruments yesterday, and I was very skeptical about any upside follow through and risk. And so therefore, having this long already, I didn't want to just pull it off the table because of that. But that's the conversation I wanted to have today, because how many people looked at yesterday's move and said, we're going to all-time highs. We're bouncing off of this, pretty key support here, and we're going to go to all-time highs next. So a lot of people probably got sucked in the market, not only on the long side yesterday, but I think a lot of shorts probably covered as well. So what are your thoughts about where we're at, guys? Any opinions here? And Ryan, let's we could talk about like the difference between candles too.
Sorry, did you ask somebody in particular?
Right.
Sorry, I forgot to push my button.
I was talking to Billy Joe Bob in Indiana, but I didn't hear him chime in. So
Jiminy Bill Bob.
Jiminy Bill Bob. Yeah, sorry. I was actually looking to take a short, the same as a couple of the other guys in the room, based on that first candle, because it did look bearish. And then I looked at the TVC one. I thought, well, maybe it's not. I mean, look, we can argue over the slight differences in candles. I'm still feel bearish short term. I think this does head a bit lower. One of my guys keeps flagging up the option expiries coming up, which if you look at the charts, pretty much lines up with the last 3 or 4 dips that we've seen, decent dips.
Yeah.
So that could be something that comes into play as well. Whether we
big
see
expiries tomorrow, right?
Yeah. So is it tomorrow or next week? I can't recall. It's third Wednesday, isn't it? So yeah, tomorrow. Is it tomorrow?
No, next week. It would be next week.
Yeah.
I wasn't sure which ones you were talking about. But anyway, go ahead.
Anyway, so that's I'm in the bearish camp, at least short term. And it's not looking too hot this morning, is it? So it could be that we head lower despite whatever the whether it's a bullish engulfing inside, whatever. The fact of the matter is the price action is going to tell us what it's going to do, and I think it's a bit lower.
I talked to just so you guys, I did a couple of interviews yesterday, and both the folks that I interviewed, which, by the way, had referenced, I'm sorry, the last couple of days had referenced the transports and the Dow transports and how we're just really, marching across these lows. But, Dale,
Yes.
old school.
Yeah.
How do you feel about transports here? If transports start rolling over,
They're a big deal.
it's a big deal, isn't it?
Yeah.
Yeah.
It really is. So, I mean, it's the really the backbone of, retail, gasoline, everything, trains, planes, automobiles, so if they're not moving and they're not making money, it shows an economic slowdown. And, I think that's because of the supply chain. Also, they can't find drivers for trucks too. So, I think we're going to have shortages in a lot of things as we move further along, unless the supply chain issue is resolved. So, I think that's a negative sign. It's a nice descending triangle technically, and yeah, what's a measure? 240 to a 200. It could go to 210. Why can't we have retracements of this huge move from the COVID low to recent highs and just correct 38%? It would still be
Yeah, here's I was just, the problem is the consensus trade about everybody is just expecting a correction. But, this could be one of those situations where the the masses are right, because, just because there's a consensus, like everybody, like, I was watching something, a video yesterday or the day before yesterday, how majority of the market's looking for, like, asset managers are looking for a correction this fall, and then when you hear things like that, you go, well, that's what the majority of people are feeling. But there are times, just so you guys know, that the masses are correct. It's not always like you can't always be contrarian, right? Being contrarian will serve you well, I think, a lot in the markets, especially in intraday. But, some of the bigger themes, when the bigger themes come into play, and the longer term stuff does come into play. And then also, after such a big move, like Dale, like you're pointing out, to see, even a 24% correction in the S&P right now and I'm not going since COVID lows, I'm just going since the lows back here in September of last year. I mean, a 24% retracement takes us to 42.26, and coming out of an ascending wedge, minimum expectation would be a 38% retracement, which would be down at 4,000 roughly. And, that doesn't disrupt any bullish trends whatsoever in the market. Right. So
right.
I'm in the camp too with you guys that I think that a correction is coming sooner rather than later. And I do believe that the consensus of us seeing some sort of pullback this fall is on. The problem is that everybody is thinking the same thing, and not everybody wants to pull the trigger all at once. But what we are seeing, and I have to, I'm gonna go back and reference currencies really quick, because I think that you guys have to keep a really close eye on emerging market currencies. You have to keep an eye on the currencies like the rand, and you got to keep an eye on currencies like the peso, where they have not seen any upside follow through in emerging market currencies, as stocks have been at all-time highs. So when that doesn't happen and you do not see that type of follow through in the currency market, that tells you that people positioned in currencies, which is they're not positioned to take advantage of the higher rates that the emerging market currencies yield them, which suggests to me that there's a lot of hesitation up here at these levels. So I would be really watching them. If you start to see the emerging market currencies really come under pressure, like the dollar Mexican peso back above 20, you start to see the US dollar, South African rand back. Well, we are above 1440. I've been telling people watch 1440. We're well above that now. Maybe above the 200-day moving average here of 1455. You start to see these currencies weaken. I would not want to be long risk. And that's, just really simple. Very, very simple for those of you that trade equities. Okay. And I wanted to throw that out there just because I think that these are some important things for everybody to be looking at, no matter if you trade currencies or not. So just any last comments? I don't know if Steve's here. Steve, it seems like he's here this morning because I saw him chatting a little bit earlier, but I know going through kids, son being, both you and Stelios or Steve and Stelios are dealing with kid situation.
Only I'm here and he's not. I'm kidding. One thing I wanted to say, somebody mentioned the Kiwi in the comments. We had some pretty important data overnight. New Zealand GDP blowout number. We're expecting 1.3%, came in at 2.8, and now people are talking about 50 basis point hike next meeting. I don't think that's happening, but the market, is talking about it. And on the other hand, Australian employment change. Big miss. We're expecting negative 90,000, came in at negative 146K. So those two currencies are going the opposite direction, and I would really, really like to see them to see Aussie Kiwi at parity to start accumulating longs there. But at the moment, the Kiwi is on fire and the Aussie is struggling, and that's the.
And by the way, just so you guys know, the Kiwi is buckling here. It's starting to roll over. I just actually sold some Kiwi this morning, not against. I didn't sell the Kiwi dollar. I sold Kiwi against something else, but that's going to be more for the ForexAnalytix community. The people in chat rooms know I put in the trade room about an hour ago. So and I'm I was surprised that GDP number was such a blowout number, but remember that's always, those numbers are in the rears, Steve's looking at Stelios's rear. That's that kind of rear. So, by the way, we have, and I'm joking, Steve, if you're listening, and Ryan, are you still here? You still with us?
I'm still here. Yeah.
Hey, we got some retail. Yeah. We got some retail sales numbers coming out in about 2 minutes. Any expectations as far as retail sales go? I would think that the number comes in a little light. I think consumer spending is starting to slow down a little bit, and the maybe a little peak in commodity prices have come off. Maybe retail sales are going to come in a little light. Any opinions here?
Yeah, with retail sales, it can go either way. It's a volatile number. It's expected down 0.8%. If you strip out autos, down 0.1%, and even the core sales down 0.1% expected. If you want to see a good consumer, then I think we could see some of this used car stuff flushing out. So the autos might come in negative. If the core sales come in positive, or if the headline comes in negative and the core sales come in positive, that tells a story that the consumer isn't looking that weak. But if it does come in negative again, that's the second month on the trot, and that, like you say, is not going to look good for the consumer ahead of the Fed next week.
All right. Well, thank you so much, and let's also keep in mind, if retail sales start to slow and we see the consumer kind of buckle down here a little bit, and we continue to see stronger inflationary data. You guys know that that's not that's kind of a toxic mix for not only the U.S. economy, but for the global economy. So let's pay attention to this number. We got also Philly Fed coming out. How much time do we have, Stel?
30 seconds.
30 seconds. 30 seconds to Mars. Wait, isn't that a band?
It is, yeah.
It's a band. God, I'm so geeky. All right. All right. I've got it on the dollar yen right now just to see the reaction here. And by the way, I still think the dollar yen, if it's a strong number and we spike up to 109.55 or so, it's a sell. I'm actually looking to sell it up there. So Well, I was hoping we'd get a spike up there overnight, but we just hadn't seen it thus far. So,
All right, let's see.
looks
Canada, who cares about Canada? Where's the other stuff?
jobless
Jobless claims in line.
Up
basically in
0.7,
line.
I think, retails.
Oh, where'd you get that? Up 0.7 or down?
Up 0.7.
Oh,
No,
up.
up 0.7.
Oh, look at it. Here we go.
That's strong.
And a strong Fibonacci, which comes on the back of a strong empire as well.
Oh, come on. I'm trying to get filled here. Come on. Spike me up. There we go.
Yes, plus 0.7. You're
Use
right.
your cursor, Blake. Put it on the candle and drag it up.
I just sold. I sold a little bit at
Good.
50, guys. Just so you know, just a sliver. I'm going to sell a little bit more if we get up towards. So I sold some right here.
Very strong on the X's. On the retail.
You're gargling in the water right now. So all I heard is blah, 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 blah. So anyway, this is the chart of the day yesterday. Retail sales. Wow, they did come in a lot better than expected. So, you know, chart of the day yesterday, this is a big double top. I'm going to play into any strength here. So we see a move up towards 109.60. I don't mind, you know, as long as we can hold below like 65-ish and stay there, I'm fine with it. But you know, futures are bouncing a little bit because of the stronger number. I think everybody's like, whew, okay, consumers hasn't fallen apart. You know, because you don't want to see the, you know, consumer spending really start to slow down with, you know, stubborn inflationary pressures, because then you get the S word, and it's not shoot and it's not crap, you know. So anyway, hey guys, I want to say thank you so much for those of you that are listening in, you know, that are not part of the ForexAnalytix community. Thank you so much for being here. We do appreciate it. If you are a ForexAnalytix family member, we'll see you guys on the Morning Edge webinar in 45 minutes. And remember, please visit our webinar sponsors. Our webinar sponsors specifically are Forest Park FX. And if you are not getting cashback rebates on your trades or trying to get ForexAnalytix for free through your trading, make sure you contact them. You can contact them live right here on Skype or email them directly right here. They manage this email address. We've been working with them for now 5 years, maybe. And they've really helped out a lot of our traders. They're like the concierge for traders, because they talk to you, figure out what kind of trader you are.
They're a broker's broker.
They are a broker's broker, but they do put on the personal touch, which in my opinion over the last 20 years in the currency market is lacking. So
yeah,
you know, when you have somebody that really handholds you and says, hey, you know, it looks like you trade quite a bit, you know, you shouldn't be using this broker because their spreads are a little too wide, and you know, that type of personal touch is hard to find. So
another oasis.
Oh, I'm sorry.
Another oasis.
Yes,
in
definitely
the middle
an oasis.
of the desert.
Yeah, these guys are very good. They're very nice guys as well.
And DJ says, and who doesn't like to be touched? That's right, DJ. In all sorts of ways. All right, guys. Hey, have a great one. And, Dale, have a great interview today. And I'll see you guys.
I'm not sure if I have one. Ronit, are you here? Do you want to present today? I saw you make a comment in chat. You do? Okay. All right. I do have an interview.
Oh, what did your interview go somewhere?
I didn't schedule one for today, but I asked Ronit to come in and see if he wanted to do it. So he's going to do it.
Great.
And I'm going to make him participant.
See you guys. Have a great day. All
right. You too, Blake.
Cheers, guys.
Okay, Ronit. Where is it? Anyway. Participants. Okay. Attendees. Stay tuned for Ronit. You're going to see some charts that are going to blow your mind. I don't know why you're not showing up. Oh, there you are. Okay. Okay, buddy, you should be a panelist now. There you are. How are you today, my trading warrior brother? Unmute. Hope you have good volume today.
Are you able to hear?
Can hear you now.
Yeah, I can hear.
Okay,
No
good.
problem.
Yeah, you sound pretty loud and clear this time. You want to share your screen?
Yeah, I'll do that.
And I thought we'd start with Ronit sends me a lot of charts to my message section on Twitter, and you showed a Dow chart that the cycle topped right on time.
Yeah.
Not that you haven't had misses about it, but that was uncannily accurate. You want to just start there, or you want to
Yeah.
talk about? Okay.
So we'll start something with some unique concept of price stability. So this is a
Okay.
very famous temple in southern India, and it was constructed 1,000 years back. It's one of the largest temples in India. So what's great about it is that on a particular wall, it's written that there was a king who actually used to, they used to offer the gods fruit per day. So what he used to do is approximately there were 150 bananas which was served every day. So in those days, they actually followed the lunar calendar. So there are 360 days, as you can see over there. So totally, they needed around 54,000 bananas every day. So what they did is the cost of each banana was 1 divided by 1,200. That was the cost of each banana. So totally, he actually needed something like 45 coins. So if 45 coins was the interest, what should have been the principal? The principal was around 360 coins. So what the king used to do is that he used to split it between merchants at an annual interest rate of 1/8. So that he used to get 45. Okay. So what used to happen is if you reverse calculate, it's actually 12.5% per year. So what does it tell you that? They never had inflation for 30 to 40 years till he was actually the king. So what it tells us that per month, if the interest rates are 1%, it's like a limit. It's like RSI 70 and 30. If the interest rates per month is 0.618, which is around 7.5%, it should not go below that. Economy doesn't collapse. So if it is more than 1.618 per month interest, that comes to around 19.5%. That's technically hyperinflation. So in those days, people actually knew about good governance. So same thing goes with this is one year bond chart of interest rate chart of US. So what does it tell you? That during the 1990s, the interest rates actually came below 7%. And that's why you hear this term in pension funds, they need actually 7 to 8% to survive.
Right.
So there's something uncanny about it. So let's move on to this thing. This is something which I was actually working on last week. This is actually a Fibonacci numbers. So on top of it, if you actually take 2020 as a base, where all problems started, particularly, if you actually subtract Fibonacci numbers 1, 1, 2, 3, 5, 8, they're all panic cycles. If you see, there are major panic cycles. 2018 was trade wars. Then 2016 was there was a financial problem in Europe. I think we had a low in oil too. 2008 again. If you subtract 13 from 2020, and if you keep going, even 1932 is there. If you actually check on left hand side of my screen, I hope you are able to see my mouse.
Yeah, we can.
So there is 1877. That was, I think, railroads boom, which went bust at that time. There was a panic of gold in 1877. 1788, again, very interesting, French Revolution. So it is, this is actually going back Fibonacci numbers. I think even Robert Prechter actually talked about this, but this is something really strange, why it is happening. So if you move forward, it is 2021, 2022, 2023. And then there is 2025, 2028, and 2033. So you can actually do lots of permutation combinations. You'll get lots of numbers. So and even 1987, 1929, you can actually see over here. I've marked it as red. So that was something, all these years are actually connected, just like tops and bottoms. So
Okay.
this is the Dow chart, which we actually did. So what I did is it's a log chart, which is a channel chart for the last 100 years. So if you carefully observe, if I take the base as 1974, December, and there was a mini crash in 1987, if you actually extend it Fibonacci, you get October 2008, and then there is February 2020 on the right-hand side. And ironically, it actually bounced off, after 18,300, it bounced off. And now I believe that this September is a very critical year, and it is making a high in this September. So that's not very good sign. So that means that there is a probability that there is some event which is going to trigger off. I don't know what it is, but I think that it's going to be the energy problem. So we'll come on to that next.
Okay. Yeah, your Ronit is a big proponent of sharply higher commodity prices.
Yeah.
Okay.
So initially, what would actually break the camel's back? So that's the thing. This is again a channel which I think it's a possibility if Dow Gold Ratio has to come to 2027 as a low. So what I did is I connected 2002 and 2009 bottoms, and that actually I have extended it. So you can see over there, this is a pitchfork which I've drawn from 1929. So you can see 1987, there is a parallel, it drops within the channel. Same thing goes with 2020 over here. So it's strange that it is following the channel. Now, why would actually, if oil goes up, what is the percentage of CRB which will go up? We have to actually be very careful that what if the central planners, let it run, or will they collapse it? So you can see the channel over here. It actually connects the previous two tops, and right now it's an breakout around 225 or something like that. But even with 207 or 200, this is Thomson Reuters CRB index. So how much
you
can
think
it
CRB could go to 331? Am I reading you correctly?
Exactly, perfectly right. So that's around 30%. So if CRB has to go up 30%, how much should oil move by? Probably at least double, maybe. So that could be, if oil is a disruptor, then probably metals could go up and then actually collapse because of, demand, supply shock or demand shock. So the most important thing over here to see is if oil is moving up, natural gas, actually, we discussed this last time when it was around 3.7.
I remember that. Yeah.
So that's actually a very good cup and handle or something like that, but it's a long-term breakout. So if you carefully see, the highs were like 15.62. The lows were like 1 approximately. So if the breakout was 13, you can see the Gann grid. It actually fits in very well. So the next stop, once it has crossed 3.5, it's 7.2, where we'll get some kind of correction, but it's on a parabolic path, just like what Bitcoin was in 20,000 or something like that.
Okay.
So that could be a conflict with Russia too. We don't know.
Who thinks Ronit's charts are cool? Give me a why. I mean, do you see all the work he puts into this stuff? Look at that. I mean, you don't see stuff like this. He's a thinker. Go ahead, man.
Okay. So this is the connection which I did. What is the breakout level? That's around 2.53.
Yeah.
So that's why I was actually last time talking about it could be 17. I think Ben was the guy who was actually another guy. He was also looking for that kind of thing. So it was a good trade, actually. So
well, that's what they pay in Europe, buddy.
Yeah. So there is a possibility that this whole great reset and other things, probably normally what happens is natural gas, if you see September, October, November, they have actually clocked 30% per month, a majority of the times. from 1990s. The data says that majority of the times before Christmas, natural gas prices rise dramatically for whatever it is. It could be because of heating.
Cold weather.
Yeah, this time it could be even worse. What if it actually quadruples from here? Europe is actually in big soup because of that. But if you see the
yeah, they're having the whole world's having energy crises now. It's not related to oil. It could be the grid. It could be other things they use to run their generators. But yeah, the whole world's in an energy crisis. I saw utility bills. Utility bills really skyrocketed. I think in the UK they're having a lot of problems. Consumers are paying outrageous prices for energy now.
Correct. Right? I think the same problem is with Middle East also. They're actually telling everyone to use less power, that is electricity. So everybody cannot be on. I don't understand why people want to get into batteries and solar and other things. What if there is there are volcanoes erupting, which says that there is a global cooling which is going on. It's not climate change or global warming. So it's quite worrying.
Oh yeah, I've read about the upcoming ice age.
Yeah, they have talked about this Gulf Stream. There was a movie on that also, 2012. They talked about the Gulf Stream when they were digging oil in Antarctica. And Alaska and Antarctica are still in the news. China wants it, Russia wants it, US wants it.
Someone's asking, Ronit, can I know this EMA or SMA, which time period you're using?
Okay, I use something like 21 EMA, LWMA, weighted moving average. So in a monthly average, why I do that is I simply calculate 1.5 years time, approximately 17 to 19 months minimum. So what happens is that it's just like 9 months, right? When a baby is born. So that's how they use 200 EMA. So if you actually see the 3-month average, then it's actually the tangent is, it's actually rate of growth is higher. So if you really see that a month on month, it starts clocking approximately a certain percentage, positive volume, price action. So I use 21 WMA more than anything else, not EMA. Okay, so let's go on to that. So next one, this chart is, I think it's oil. So you can see the model actually I've done it. I've made it simple. 69 is a pivot, $70. What could be the peak? $130. So even if you take 6.5 as the low, which was the contract value in last year, so the breakdown was $78 in 2019, close to that. So that's around $70. So the breakout is 60, 62 means it could be $130 very easily. So $70 is a very good trade, a good entry point where the risk is actually very less, and you can actually ride on this particular energy crisis. That means Chevron or whatever companies, $69 or $70, that could be a very good pivot where they're trying to pressurize last time. Last 2-3 months, they're actually trying to, every country is actually trying to sell off its reserves to push the prices down because they suddenly realize that they are in trouble. Okay. So this is another viewpoint where is the same chart, $72. Once that breaks out, it's 130. So now what I did is this is a combination. This is actually a Dow Gold Ratio. Why this is actually important is because everybody is frustrated with gold. Why actually gold is not moving up and the Dow is actually stable around that 19. So the good news is if 19 breaks down, you can be long gold and short Dow. Till then, you watch that 19 very, very carefully. That's why I put it over there, the slope, because the chances are that it'll actually hit at least 16, which is the yearly level. So that means gold post 1820, it's very bullish. That's why every time it comes up over there, there is supply to pressurize it. And it's not a conspiracy. If you really see that when silver was breaking out in February, the Indian government actually put taxes and push the prices down. So they are all actually, it can't be a conspiracy. The data shows. So watch out for 19 Dow Gold Ratio. You could actually make a handsome profit of 16 or 15 or even 10, I would say. So this is a long-term chart of Dow Gold Ratio again. It's forming a nice wedge. And you can see over there, even in the 1970s, the Nixon shock, it actually broke through the 19 ratio, even 1929. So it's quite balanced, very well balanced right now at 19. So that's what decides what happens to interest rates and commodities. If anybody were particularly looking for the Dow levels, this is monthly level, which is very easy to follow. If 35,600 is crossed, then stay long. It could be another pop before the drop, 37,400 or even 47,000, because they can increase the debt. But if it breaks below 33,745, then it'll suddenly drop another 10% very quickly, and then you'll have a panic. So that means that something has gone wrong in commodities. We need to analyze what happens in Europe. Okay, same thing. Europe. So this is a better picture. A bubble can actually go till 47,000 also, depending on the debt. So that's long-term averages. So right now you can actually keep 35,600, the recent top, as a major top, because why I think this is a major top is one reason is it's doubled from March 20 within 17 months. And did you know, Dale, from 1929 to 1932, how many months it declined? It actually declined 34 months. So half of it, technically 9 or 17 or 34, the decline or advance stops. So right now, there is a 17-month advance from March 2020. So this could be a possible trigger, September. This is again, I did a Fibonacci extension of the Dow. What if this is the wave 5? So wave 5 pops around 36,000 and there is an arch. So the wave 3, I'm not very good in waves because I still confirm it with Gann charts. So those are Gann fans to actually tell you what exactly the levels are. So 36,650, again, it says the same thing. Now, what I did is I put a Fibonacci extension over there. You can clearly see something happened in September and you got a red candle over there. So this is not by accident. There is some movement which is happening, and there is some Jan 24th, 4 governments are meeting actually to discuss the Quad, how to tackle China, but it could be something else, a conflict which is emerging. So another interesting fact is, if you see the wave 1 and wave 5, those who are elite wave experts, you can actually see 649 from March 2009. That's around 97%. It has gone up. So same way, 18,300 around 97, 98%. It actually matches. Another confirmatory signal. Now, looking at the dollar, what would actually crack the dollar? If this time, if there is a panic, will the dollar go up or not? So if you carefully see the stability of the dollar from 1970s, if you see, that's around 92. It's been maintained over there. Whenever it went below 92, there has been inflation, and above 92, it's been deflationary. So what I think that is that the dollar actually could drop to 83 just to get everyone wild up that the dollar will collapse and Europe will come on top. If the dollar drops around 10%, so the euro could be like 1.37, 1.3, 1.37. So that's where we get our commodity rally.
Right. Okay.
So it's inversely correlated.
Yes.
Now this is the euro. This is where the interesting part gets. For whatever reason, if it drops below 1.17, if you really see last 2 months, that 1.17 commodities actually dropped like a pin. Copper, it dropped from 4.8, 20-25% within a matter of no time. But something actually held up that euro around 1.17. So that's where it actually respects that level. So if it is not, it's not going to break 1.17, then there is a higher probability that we could get a high somewhere around December to March 2022. You can see that 1.36. So yeah, if you really see the China problem, which started this real estate crisis, it started in May 2021 when the euro was around 1.23 or something like that. So it has not crossed that level. So something behind the scene is happening, which is actually making somebody nervous. But if it pops above 1.23, wait for it to actually go till 1.37 before the final drop starts.
Okay,
This is yeah.
All right. So you're saying we could go to 135, 137, and then have a huge bull market in the dollar after that.
Exactly. The dollar could actually really go to the moon, something like 200, 250. That's quite a bit, but one step at a time. So let it cross 100, 120, but it'll be quick. It'll be very fast because if all the assets prices start dropping faster with commodities, then there is only one safe haven. Even if bonds start falling, everybody wants to get into cash. And the way the export-import market or the trade finance market works is everybody borrows money. So suddenly they have to return that money. So the flush will happen at that moment. Not yet, but that's where our hint is that if the euro doesn't drop below 1.17 or copper doesn't drop below 4.2, if you really see 4.2, it was there is a lot of support around that. It dropped and then it actually rallied back on. So
Okay, just lost your volume, buddy. Let's see if he comes back. So Anthony, what do you mean? Okay, there you are. All right, we lost you for a little while. So okay, so gold, what are you saying there?
Gold 1827. 1827 is that level where it'll start breaking out to 50% rally. You remember I told you CRB could rally 50%. So gold could rally to 50%. That's around $900. So that's around 2,800. Sure, possible. But wait for that 1827. You can see over there slope. I've marked it over there because there's a lot of pushback around that level. So that means the USD yen is actually not started to collapse below 109. Everybody knows that USD yen is inversely correlated to gold. So that's where the real thing is. Same thing goes with silver. Silver is actually maintaining that pattern. So here, $25, $26, that's your green signal that, okay, it's ready for $70 to $100. So till then, just watch it. What's really happening? That's
why not try it around your pivot, 1892? If we get down there.
Which one?
Your pivot is 1892. So what if we pull back to that again?
Yeah, if it goes below 1892, that could be the final pivot. Pivot in the sense, how much can it drop from there? It could again go back to $12. But what is the case of the dollar? It must be 100 plus easily. So people won't give up this time very easily. But look at the peak over there. I'm talking about this is on a weekly level. So there is a possibility that it could gain so much percentage. So that's, you can see over there in 1980s, it actually gained quite a 400% from there. Right now, it's not even like 20%. So 400% from $25 should be $100 approximately.
Yeah. Okay. All right. I think we're about out of time. So if you want to show one more thing.
I would show quickly. This is very important. If the euro is actually going to go down, euro bonds could actually break down around the level 171. Same thing goes with treasuries. So if it drops, it could drop very fast. That means if euro is going to gain, euro bonds are going to sell off very rapidly, 156 to 130. I don't know if the ECB will allow it, but there is a big probability that there is an event risk which will trigger this off. So watch that 171 very carefully. Same thing goes with treasury bonds. That 167 to 162 is a very critical level. That could also go down to 130, something like that. So that means the rise in interest rates could be because of higher oil prices. I'm talking about $130 to $190. Something like natural gas should be even higher. So I could show you one chart where quickly I can tell you the natural gas. There is one natural gas. Yeah, 1 minute. No, the Dow divided by WTI. Yeah, this is a very critical thing. Look from 1900s. So this is Dow divided by oil. Normally, when the panic hits in 1960s, 1929, the ratio was around 340 to 400. Now, if it has to go back to normal to 1982 or 1921 to move, that means either Dow has to drop dramatically because of oil spike, and there could be an energy crisis. So that could be three to four times, at least 3 times from here oil. So that's around $200 very easily. So and this is a very good chart where 4 months back I actually saw that the ratio of crude oil to natural gas was breaking down 20. So that is a sign. So if natural gas should be hitting $7 or let's say $10, 10 into 13 is approximately $130. So it's actually mean reverting. So it's done that in the past 2018, 2019. But this time, natural gas and oil both are going together. So,
Okay, buddy.
I think that I'm done.
That's gotta be it.
Yeah.
Okay,
So,
I mean, you've
if you have any questions, you can ask. So anybody has any questions?
any questions, quick questions for Ronit? Kay is saying thanks, great show. A lot of people stuck around to see your stuff, Ronit. Thank you so much for stepping up today. Anthony said great. I appreciate it, my trading warrior brother. Thank you very much.
I think we were discussing Dow Transports, right, Dale? You can see the
What?
cycle over here. Dow Transport. I think you were
Yeah.
talking to Blake about it. You see the
Yeah.
cycle over here. 2008 May, 2011. You can see the cyclicality. I'll move it and show it to you.
And here we are again.
Yeah. So that means
Okay.
all the 4 times or 5 times there was some oil crisis or trade
Yeah.
wars which is happening. So this is a larger wedge if you really see.
Yeah.
So that's a bearish wedge. So that
Okay.
answers that there is a possibility that there could be an energy crisis.
All right, buddy. So thank you, my friend. Appreciate it. Super
Dale.
commodity bull with lines in the sand for all of his ideas, which is key. If an idea is negated, go the other way. Thank you very much, Ronit.
Thanks, Dale.
My trading warrior brother, Ronit, follow him on Twitter. Your Twitter handle again, buddy?
Ronit9q at gmail.com. At Ronit9q. You can actually
At Ronit9q to follow him. Okay. All right, that's a wrap. You could join the guys in 12 minutes for Morning Edge, and we'll see everyone to wrap up the week. Good hunting, good luck, and good fortune. And don't just count your pips and your charts, count your blessings. See everyone tomorrow.
Thank you, Dale.
You're very welcome. You're very welcome too, my friend. Adios.
Adios. Bye.